This video compares two software tools. An AI voice walks you through everything clearly. Let's start directly with Simply Safe Dividends pricing, because this platform is positioned very clearly as a premium dividend research service, not a general purpose portfolio tracker. Simply Safe Dividends is priced at $39 per month, billed annually at $468 per year. There is no discounted entry plan, no flexible monthly downgrade path, and no complex tier structure to navigate. You either subscribe at the full rate or you don't. That pricing alone makes its target audience obvious. Long-term income investors who prioritize dividend safety, stability, and risk control over keeping subscription costs low. At this price point, users receive unlimited portfolios, full access to the platform's proprietary dividend safety scores, alerts for dividend increases, cuts and suspensions, and detailed income calendars with forward-looking forecasts. Simply Safe Dividends also includes analyst-written research reports, valuation charts designed to help investors avoid overpaying for yield, and financial charts with up to 10 years of historical data. Stock and closed-end fund screeners allow users to filter opportunities based on yield, dividend growth history, safety scores, valuation metrics, and income consistency. The platform's philosophy is clear. Avoiding dividend traps is more important than chasing the highest yield. Feature-wise, Simply Safe Dividends is built almost entirely around risk reduction and income durability. The dividend safety score sits at the center of the experience, combining cash flow coverage, payout ratios, earnings trends, balance sheet strength, and recession performance into a single, easy-to-understand signal. Income calendars and forward projections help investors plan cash flow months or years ahead, while real-time alerts notify users when dividend policies change. Analyst commentary adds qualitative context, explaining why a dividend may be safe or risky, rather than leaving investors to interpret raw numbers on their own. Where Simply Safe Dividends truly shines is clarity and guidance. It translates complex financial risk into actionable insights, which is especially valuable for retirees, near retirees, and conservative income investors who care more about preserving income than maximizing returns. The platform removes much of the guesswork around dividend reliability and emphasizes consistency, sustainability, and long-term income preservation. That said, the downsides are just as clear. The price is high compared to most dividend tools, especially portfolio trackers and income dashboards. There is no lightweight or budget option for casual investors, and the platform is not designed for transaction tracking, portfolio rebalancing, performance attribution, or total return analysis. Investors who want hands-on portfolio mechanics, frequent trading insights, or detailed allocation analytics will likely find the tool restrictive. The strengths of Simply Safe Dividends are its focused research, safety-first philosophy, and structured guidance. It's ideal for income-focused investors who want confidence, discipline, and professional insight built into their decision-making. The weaknesses are cost, limited portfolio mechanics, and reduced flexibility for investors who prefer a more DIY, data-driven workflow. Now shifting to 22 Dividends pricing, this platform takes a much more practical and accessible approach compared to premium dividend research tools. 22 Dividends is designed primarily as a dividend tracking and cash flow monitoring solution, not as an analyst-driven research service. Pricing starts with a genuinely free starter plan, which already includes up to 75 stock transactions, 250 credits per month, visibility into upcoming dividend events, basic cash flow monitoring, and the ability to import and export data directly through Google Sheets. That spreadsheet integration alone makes it immediately usable for beginners, data-driven DIY investors, and anyone who already manages portfolios outside traditional apps and wants structure without paying upfront. The Pro plan is priced at $4.99 per month, positioning it as one of the most affordable paid dividend tools on the market. This tier removes transaction limits entirely, boosts monthly credits to 1,000, and unlocks more detailed reports, dividend-focused portfolio insights, and tax estimation features based on actual cash flow. All starter features remain included, but with far more room to scale as portfolios grow and transaction volume increases. Feature-wise, 22 Dividends focuses on operational clarity rather than interpretation. Users can track dividend income across portfolios, monitor upcoming payments, analyze cash flow patterns over time, and generate structured reports without navigating heavy analytics dashboards. The platform's strength is how easily it fits into existing workflows. Investors who rely on Google Sheets or Excel can automate updates, export clean data sets, and build their own custom analysis on top. The inclusion of tax estimation tools also helps income investors understand real-world after-tax cash flow, rather than just headline yield numbers. Unlike Simply Safe Dividends, 22 Dividends does not attempt to score dividend safety or provide analyst commentary. There are no proprietary risk models, no valuation warnings, and no prescriptive guidance telling you what to buy or avoid. Instead, the platform gives users raw visibility, reporting tools, and automation, and leaves decision-making entirely in their hands. This makes it flexible and empowering, but it also places responsibility squarely on the investor to assess risk and sustainability independently. The strengths of 22 Dividends are affordability, simplicity, transparency, and spreadsheet-friendly workflows. It's ideal for DIY dividend investors who want clean data, predictable cash flow tracking, exportable reports, and automation without paying for research they won't use. The limitations are lighter analytics, no dividend safety scoring, no analyst insight, and minimal guardrails for investors who want help evaluating dividend risk or long-term reliability. Looking at public perception, Simply Safe Dividends currently shows a Trustpilot rating of around 4 stars, but based on a very small number of reviews, meaning it should be interpreted cautiously and not treated as statistically definitive. At the time of recording, 22 Dividends does not have an established Trustpilot rating. When review volume is limited or non-existent, ratings should not be used as a proxy for quality. In these cases, hands-on testing, feature alignment, and workflow fit matter far more than public scores. Final takeaway: if your priority is protecting dividend income, avoiding dividend cuts, and relying on structured research that turns complex risk into clear, conservative signals, Simply Safe Dividends is the stronger choice. If you want an affordable, hands-on dividend tracking tool that integrates seamlessly with spreadsheets, emphasizes cash flow visibility, and gives you full control without paying for research you won't use, 22 Dividends fits a very different but equally valid role. If this comparison helped, hit like, subscribe for more honest investing software breakdowns, and click the link below to explore the platform that actually matches how you track income, manage cash flow, and build dividend wealth with confidence over the long term.